Welcome everyone to webinar 4. My voice is a little bit spent after dropping all of section 3. I finally gone to the mind space and was able to put out what I wanted to put out for all of you. I don't know which crackheads here have already seen all of it. Hopefully you guys are taking your time through it. It's about, I think it's like 2 or 3 hours total. I'm not sure, or maybe like 2.5. This crackhead over here. You're 4 out of 5, 3 out of 5. Nice. Hopefully you guys, is it helping you guys with Wyckoff a little bit at least? Of course you guys know that you're gonna have to, a lot of Wyckoff is gonna come from, your own charting and all that stuff. And that's the thing with almost any trading. A lot of it's gonna come from your own charting, your own back testing, or even forward testing, seeing how it plays and then refining your own strategy. But hopefully the stuff that we have released is giving you a much better understanding as to how I, for instance, see Wyckoff. Because there's so many different ways. Even Wyckoff, something that technically should be simple and understood one way is understood very, very a numerous of different ways between people, even between Wyckoff himself. If you go back to the stuff that he actually wrote, like, yes, he uses volume, but also, in some cases, he himself doesn't always use volume. He would use comparative analysis, right? Which is, looking at, for instance, Euro US dollar and something that's compared to it, like Australian dollar US dollar, and seeing where manipulation is happening. And if it's happening, he would look for the schematics to trade, right? So like even with Wyckoff himself, he had different ways of trading it sometimes, and he had different entry criteria, right? He didn't use, for instance, what we do with supply and demand zones to get involved. He didn't use it from areas of potential supply and demand. He used it with news or whatever it is, right? There's a variety of ways to get involved in this market and to analyze it. So I think it's really cool that we finally got like something that is kind of dead set as this is Wyckoff, right, for you, and you guys can see how it applies pretty much on every time frame. Hopefully, the main thing I wanted a lot of you to take out of section 3 was, because a lot of you know that I trade like the 5 second, 15 second, 1 minute, like very low time frames, and might think that what we do is only applicable to some of the lower time frames. Hopefully section 3 and the videos of 3, 4, and 5, I'm not sure which one it was, the subsections, we covered how it actually happens absolutely everywhere, including the much larger time frames, right? Like even the weeklies, you guys saw that Wyckoff occurs the same way on the weekly, and if you follow it from phase to phase with the stopping action, the buying climaxes, the ARs, the STs that are usually inside the buying climaxes, the UTs that take out the STs and the breakdowns, you'll see that it applies to almost any time frame. And soon, hopefully you guys will look at something like this and say, oh, okay, I have a distribution, an accumulation, and a distribution that became an accumulation into a distribution into a large distribution, and this distribution happened inside this distribution, and so on and so forth. Like at this point, you should have, especially after section 3, you should have the ability to look at a market and understand almost any area where Wyckoff has happened. It's not hard to look at an area and say Wyckoff or say Wyckoff. What's hard is understanding why we say that these are Wyckoff and what's actually happening in these zones in correlation to, for instance, order flow, how we're moving, why are these things happening, why are they tapping into certain areas, what's at these areas, and these type of questions need to be also asked and understood as you study the understanding of Wyckoff. And don't worry, by the way, everyone, this is all recorded, so we're good with that. Say if you formed, okay, so we'll get into the questions in just a second, but for any of you that remember, we sent out a little markup at the beginning of, I think, Friday, and end of Friday, or even on Saturday. Oh, yesterday, yeah. Yesterday we sent out a little, I asked that everyone just stays muted, just because it's better. Here we go. Just mute that. Beautiful. Keep that open just in case. So if you guys remember on Saturday, yeah, so this is Saturday. Let's open this in the original so we can actually see it. So if you guys remember this, I sent out a mini Bitcoin chart on the hourly, basically expecting it to make its way right up into, actually deeper, as you can see. So even though it tapped into it, I expected it to come deeper into this 4-hour supply zone or 1-hour supply zone, whatever it was when we refine it, come into it, give us some Wyckoff, and continue dropping to these lower points. And lo and behold, if we go back to that higher time frame, so that 4-hour area was right here actually. So now it's just a tick. This is how I follow price sometimes. It just helps me see things. But it did tap in deeper as we said it would, right? So here it comes off the mitigation and comes deeper into it and gives us exactly what we expected. So it actually begun to give us Wyckoff on a 15-minute, and you can of course come and follow this with for instance, the preliminary supply or preliminary supply is up to you. Follow that into the buying climax. Either the AR or the AR, both are viable, but I would have used this as the AR because it's the next swing, as you guys know from section 3. Follow that down to the AR, the ST creating that liquidity again, right? Follow that down to your sign of weakness in phase B. Big move up into the up thrust, move down, no breaks yet, nothing important. There are intermediary term breaks, which are mentfx block breaks, and if you notice, if you had used this mentfx block, you had another distribution in here, so already you can see that, without even confirming Wyckoff, you have opportunities to look for new Wyckoff, such as this, inside of it, to trade that. As we broke down, we are expecting sells pretty much from this point onwards. We've confirmed the schematic, and we're expecting it to come lower, usually. And this is kind of a Wyckoff thing. I believe he would target as a partial the first, the range of the schematic. So what I've been doing a lot is I've been taking a schematic and just projecting that range down, just like this. So for the most part, I could believe that price is going to make another low now into this area at least. So that's a really interesting way to, another interesting tool that you guys can use, that you guys can play around with. But ultimately, like I said, there's so many things you can do with Wyckoff and so much refinement you can have that this is something new that I'm adding to my own arsenal. And as you guys can see, it's not going to change my strategy. It's not going to change what I do, but it's going to allow me to not only get involved on even higher time frames, but potentially project higher time frame areas of interest, right? So we know where more likely it's going to reach for. So again, it's just adding to your arsenal. Like, even though what I do works and what a lot of you will do works, that doesn't mean you don't have to stop learning, right? There's always something cool that you can take out of something. So as you guys can see, we did break down here, and even then, I wasn't sure about where I wanted to get involved. I was considering that it would come up into here, and at this specific mitigation here, I thought it could go lower, so that's where I was looking at it first, but it never held here. I wasn't even watching it, and it made a move right back up into here, and on a 5-minute, again, with the same thing we've spoken about, you have, as you know, beautiful Wyckoff. Actually, it was on a 1-minute. You'll see that. Yeah, there you go. So we come up. We have this huge stopping action. This is all pretty much a preliminary supply. You could use this high right here, the stopping action before the real stopping action, right? Or you could just use kind of this whole thing, right? You have this big move up, preliminary supply, and now you have it coming up. You have it up into the buying climax. Follow down to the next swing, right? Not just this one, but the actual swing. AR, ST, sign of weakness in phase B. You have the UT that comes to take out the ST. In this case, it also takes the buying climax out. The UTAD, the breakdown in price that gets below our last low. Whoops. Well, you can see it got below it. There you go. Got below it. And it left behind the final, supply zone right here, which is exactly where you could have been basically looking for opportunities to get in, or you're good to go in, basically. Or you could have used the larger one, which is the mentfx block within the larger mentfx block, right? So you guys can see very quickly how you could put all these together and how many entries you could have gotten from this area. So the entries could have been taken on the 15, the 5, now the 1. Even if you want to go lower, there are Wyckoff schematics in here, most likely. I mean, I will go check them out since we're just doing the webinar, so let's check it out really quickly. But you get down to lower time frames, and again, it's going to get really ugly. For those of you that don't like the ugliness and don't want to study it like that, line chart, and you have the same thing. You have your huge move up, the stopping action, preliminary supply, potentially buying climax, AR, maybe an ST in there. Can't really see that. UT, maybe a UTAD, breakdown, the test, and then you have the breakdown, right? So this is just kind of the same price action. If you wanted to actually see it on a lower time frame, let's see if we can actually spot something. You could possibly be looking at this overall as a schematic on its own. So you have this big move up, the stopping action, the buying climax, AR, ST, UT, UTAD, and you'd be looking for the breaks down below this, which would put in new mentfx blocks here, new mentfx blocks here, so you understand that you're really shifting in order flow on this specific time frame, right? So as we get below that, we can just take a look at what happened. You can see we've come to make that low, and now we're just coming to mitigate this overall mentfx block here. So this whole thing is a mentfx block, and again, you can study the price action in here to try and find out exactly where it might want to come. So most likely, it's going to make a run for this last up move before the down move. So this could be like a very, very refined entry if you want to take this, but there's also a really big chance, because we're in such choppy price action, that prices will make a higher move into here, right? So this is just about your own risk tolerance and what you've seen work for yourself. But if I had taken a sell here, I'd most likely just look for like an open sell here, and then a sell maybe somewhere in here with a stop loss still above this high, right? Because, I mean, if you've studied this deep enough and you trust that this will hold, then go for it. But since it's a 15-second for me, it's just too much for me, right? So as you can see, it kind of holds. Okay, no. So it does get higher than it. Perfect. And you'll notice that we had another distribution in here. So you can start to see there's fractal distributions almost everywhere. You have the BC, AR, ST, sign of weakness, up thrust, breakdown. And again, you have areas in here that act as mentfx blocks from which you can look for sells from. And most likely it's going to come make one more touch of the mentfx block in here and drop off again, right? You can keep watching this. So, we come just outside of it, right? Do we come into it? Let's see. Okay, so we do. There we go. Right, we come tap right into it and drop off. So again, I haven't looked at this, but you can anticipate price. This is how I sometimes backtest stuff, right? I will look at a specific entry I might have even taken and just kind of go back in and say, where else could I have gotten involved? Because guess what, guys? And you've seen this happen multiple times. There's not only one place to get involved in a potential sell bias, right? There are hundreds, if not thousands. And they're all found either fractally or even if you were on the higher time frame. So if we did look at the higher time frame, potentially if you hadn't gotten this sell-off, you might have seen the breakdowns in price here. As we broke down structure here, you might have started looking at the mentfx block here for new entries if prices did come into here, which they're doing right now. And on lower time frames, there might be actual kind of mitigation in there. So in this case, maybe not. Maybe you see this as a distribution and you take the sell off, maybe new mentfx block, maybe look for sells up in here. Looks like it just kind of falls off the face of the earth. And that's fantastic. And as you know, because the entry for me would be on that lower time frame, partials are not just all the way back in lower prices here, but they are in line with that lower time frame structure as well, right? So this is something we're going to cover in like management, and but it's something that you guys should understand yourself, right? If you're on a higher time frame and you're expecting a certain structural move, that structural move is only to be expected to where the new potential high, which is going to be the next low, or like the next liquidity point. So in this case, if you're looking at a very low time frame and you're seeing prices break down and you're selling from here, you need to anticipate that this is the first target it might have before it might take it out and then come take out your entry that might still respect this higher area, because guess what? Structure is fractal, right? Respect that higher structure and then drop lower. And theoretically, this would have been a loss had you not properly partialed or moved your position in line with what order flow is telling you. Now, there are going to be times where the order flow and the next partial area or the next structural area is not going to be like a huge RR, or even might be tiny RR, or even in commissions. And in that case, yes, you can work around that. Or in other cases, if you've studied your own refinement and your own entry criteria, you'll find what type of RR works best for you. And if you know that almost any time that you get an entry, it almost always runs 1 to 5 or 1 to 10, then what's the point of partialing at structure? And you're correct about that, right? There, Ilias, you want to get rid of that, man? Shit. So yeah. Yo, bro, you good? Chill, it's all good. No more, don't annotate. I don't know how to disable annotation, so none of that, please. But the point is, if you've tested a strategy that you have yourself and your own refinement entry, even if it's like the same entries as me, but you've noticed that any time that you seem to enter the market, it either loses or it goes 1 to 5 to 1 to 10, then guess what? You should be aiming for 1 to 5 or 1 to 10. Like, let's say it's 1 to 5. There you go for 1 to 5 and stick to it, right? Just don't sway away from it. And even if you show me it and you say, oh, it's a loss, I would have told you, maybe I would have partialed there. That's probably what I would have done. But if you've tested your own thing, then you should know how exactly you want to get in and out of the market, right? That's pretty much all smart money. Oh shit, I need to find a way to delete these brush tools now. Hold on. Let's see. Oh, there we go. Does that work? Nice. Fantastic. So yeah, basically you guys can see how there was a number of opportunities even on the Bitcoin trade. And again, no session, no kill zone, no timing, no Asia, no London, doesn't really matter. All that matters is that price gave you certain setups at the time that it was moving. You had certain supply and demand zones you were interested in being a participant at with potential structure in play. And as a result, you got involved using the distribution that occurred in a certain area. Or in this case, if you were looking for buys, you might have even found buys in an accumulation here, took that higher, found partials along the way, and now maybe it came back to hit you break even, right? This is why, even though a lot of you, as you recall, were selling Euro US dollar, if I remember correctly, a lot of you were selling Euro US dollar last week and doing great doing it. I was only buying. I didn't have a single sell until like Friday. And all those buys, with the exception of one of them, ended up in profit, right? Now, what's the reason for that? Well, it's because price can still deliver to you the type of structure and liquidity grabs that it needs to do before it continues a move, right? Again, back to the idea of needing to buy to sell and sell to buy, and that's how it works, right? So, let's just read through some of these really quick, work through some, and hopefully I can actually get through some of the Discord webinar questions, because I swear, like, we have so much questions in there, and some of them are really good, and I just kind of forget. My mind has been blown now that I'm back on the charts. Oh, I'm happy to hear. Yeah, so hopefully a lot of you are enjoying the section 3. Like, I tried my best to make it as coherent as possible, because as simple as Wyckoff is, the fact and the way people have taught it and the way people have shown it can really, really confuse people. And if you really do dive into the actual subsections of Wyckoff and all the phases, like, there's actually a lot of knowledge to it. And, you know, you can go further, do your research. Again, I still left that stock charts website in the Discord. So for new people that are watching this or, you know, rewatching this, if you go into section 3, I still left, holy crap, this is tiny. I still left the Star Charts website here because, again, like I said, the Star Charts website is really good for explaining to you what overall happens in the Wyckoff method. However, now that we have these, they pretty much cover the crux of what it is that we're doing. And hopefully a lot of you are starting to see that it's nothing more than what we've done thus far, right, with structure and with supply and demand, but it's also taking it one extra step with looking for potential, projections for the actual liquidations of certain buyers and sellers, right? Because in reality, that is your edge. Your edge is that you know that every time you enter, even when it loses, every time you're entering, you're literally entering on the grab of someone else's orders. And if that grab is in line with the higher money interests, then you're going to be in that play properly, right? If you really think about what we're doing, and I know a lot of people ask the whole question of, you know, will this always work? And if you do, go and check out this subsection where we talk about will this always work? But that's also a part of it. The reason that it's always going to work is because when it happens, the only reason this happens is because they're literally grabbing the orders of other people in the market. So as long as there's going to be orders in this market that are up for grabs for smarter money, then that's going to happen. You're going to be able to see that happening. And if you're in line with what they want to do on a higher order flow basis, you're going to be part of that move, right? So hopefully that kind of gives you a little psychological shift right there as well, understanding that you're literally getting involved on the grab of someone else's liquidity. And even if it's wrong, eventually moves like that are going to be right, especially if you refine them, because you understand that you're quite literally entering other people's orders, right? Wyckoff is the easiest to understand. Structural and setting a bias plus risk management is harder. Yeah, I mean, risk management is the hardest. We talk about it all the time. If I gave you guys $1 billion right now and I told you to trade the way we trade, a lot of you would be completely happy with taking 1 to 0.5 RR partials. Why? Because that would be worth about $50 million. And, you know, everyone's happy with that. But when it comes down to like a 100K account or even a 1K account, or for some of you that are like very new and still learning, maybe have a $100 account, that partial is 0.01 cents or like 1/100 of a cent, doesn't feel worth it. And you want to hold. And that already sets you up for disaster in the future, right? You need to recognize that you have to ask yourself the question, if I had the money to make that $10 partial look like a 10K partial, would I be partialing at these points? And if the answer is yes, then you need to reconsider the way you've been managing all your trades thus far, right? If you're just managing your trades the way you're managing them because you want to make more money, I mean, it's good and you'll make money, but it can be very, the consequences can be kind of drastic, right, in the long run, especially if when you do start making money, you start changing up your own risk management without sticking to something, right? The point is, you should be able to do what you do right now with $5 the same way you should be able to do it with $5 million. Now, again, I don't even have $5 million. I don't even have $1 million to trade with. I do have buying power wise, but I'm not actually trading $1 million. So the question is, would you be doing the same thing on a bigger account? If the answer is yes, then pursue that. If the answer is no, begin to refine and continue to study the way you want to be involved in this market, right? Halfway through the third vid, Firebro, thank you, man. What's the best way to use volume? So watch section 3 because I talk about this. I do not use volume myself. We do not need to use volume because of the fact that we use a combination of order flow with structure, with mentfx blocks, and with supply and demand zones. So that is what we take away from volume. Also, with how structure breaks happen, with momentum, right? That's all part of it. Volume is nothing more than just an extra bit to that if you want it to be one, right? So definitely watch those videos. And if you do want to use volume, check out my public video on volume because I kind of go over that too. Wait, Wyckoff appears on every time frame? I hope you're joking, but yes, it does. Absolutely everywhere. If you are joking, then that's funny, but if you're not, I'll show you very quickly just to explain it. Right, you saw this is Wyckoff. You saw me get lower. There's Wyckoff in here. And now, similarly, if we really wanted to, if we want to like even, okay, so maybe it's not on Bitcoin, because Bitcoin is just fucking drastic, but if you really wanted to get into it and take a look at what actually happened in the past on Bitcoin, even on the daily, right? This right here, oh, I have so many toolbars, Jesus Christ. Let's get rid of this. This right here is a distribution, right? This right here is like a reaccumulation, or if you studied it deeper, there's accumulations inside of here, okay? Like if you just move across, there's accumulations in here. There's other accumulations in here on most likely a 1 hour or a 15-minute chart. If you just go to the left here, this is all a distribution, a very ugly one, right? And if you started using this as the buying climax, you might have not spotted it. But there's a better one probably somewhere in here. So if you looked at this on a lower time frame, like a 8 hour or 4 hour, you probably see a nice distribution. Here there's an accumulation. This is an overall accumulation, no shit, because we're at the bottom, we go up. But like if you actually went in and studied it, you would see that not only do you have this as a one large accumulation, but within that, even on the daily, there's also this accumulation, right? The selling climax, AR, ST, sign of strength in phase B, STB, spring, break above, come back to test areas of the last mentfx blocks or the last large mentfx block, with inside there, if you studied this on a 15-minute or a 1 hour, you're also going to see Wyckoff accumulation right there. And then if you went further and looked at where it tested at this unmitigated demand zone and looked inside of there, this on a 15-minute or even a 5-minute chart is going to be Wyckoff as well, right? So Wyckoff is absolutely everywhere. You can see it when you look at any range like this, right? You should be able to spot these liquidations and know that there's Wyckoff there, and you can kind of follow it along, and you can see that this is perfect Wyckoff, literally. This right here, what I just explained to you, is perfect Wyckoff. Again, it's not that clean because it's on the daily, but, I mean, you should know that it exists, and you can go and refine to see how much cleaner it can look, right? Let's look at the 8 hour. It's starting to look better. Honestly, I like it more on the higher time frame, not gonna lie. Like 12 hours pretty nice, right? See, you're coming down hard. You have the stopping action, right? So that's the preliminary support. Selling climax. Follow that up to the next swing, just like we went in section 3, AR. Follow that down to the places that test pretty much this area, ST, right? So you've created equal lows pretty much. Move up, sign of strength in phase B, just taking out some buyers or whatever so we can get into more sells to start liquidating even more people that were trying to buy this. ST and B, right? Now we're playing in this area. Structure is really existing here. Coming down, spring, structure exists here, but the overall structure of the validation of the schematic exists here. If you go inside of here on a low time frame, you know what that is? Wyckoff on a most likely a 1 hour or 3 hours. So again, for the people that watch this in the future, or even you guys, even after this webinar, go in and look at an area like this. Ask yourself where the Wyckoff is, and then go and find out on lower time frames, right? It's a great way to practice how to spot Wyckoff. Again, there's Wyckoff here too. Now, I don't have to go on a lower time frame to see it, right? This is the idea of time frames. I can see that there's a stopping action, a selling climax, AR, ST, sign of strength in phase B, right there with that wick, ST and B with a spring. So this could be an ST and B or a spring, but it's most likely STB and spring because you're on a lower time frame. You're going to see the actual movements, right? The move up doesn't break structure yet, starts a test, breaks structure, and look what it does. Returns right back to the last possible demand zone for the last point of support before the real markup happens. And as it marks up, begins to break larger structure, validating the overall schematic on the higher time frame. And most likely, what's it going to do? Have some kind of backup into that zone, either this mentfx block or into some of the demand zones in here, right, to continue higher. And what's going to happen at these areas? Accumulations of some sort, right? And you can watch that happen. And we accumulate, as you can see, and you can see the accumulation without having to go on a lower time frame, and then you have the next markup. And all of these are opportunities to get in. And again, this goes to show that there is no such thing as FOMO when you're trading smart money. If you have FOMO and smart money, you're in the wrong boat because you have the opportunity to get involved absolutely anywhere. And if you don't, there's going to be another one because the game is constantly being manipulated, is constantly undergoing accumulations, distributions, and if you know the areas where you want to look for those at, which is the point of us teaching this idea of finding a bias, then you'll be able to always get involved, right? So if that was a joke question, we just got pretty deep on it, but if it wasn't, then hopefully that explains some stuff to you, and definitely check out section 3 because we do attack this quite heavily. Is your preference those much lower time frames? Yes, because I'm a day trader and because I understand the market is so fractal that I can get involved on multiple entries instead of waiting for longer ones. That's it. But if you told me that, if you gave me billions of dollars to trade with, guess what? I would do the exact same thing that I do on the 15-second time frames 15-second time frames, but now I'll do it on the 15-minute. But you realize how I won't change the way I manage, the way I enter, or anything like that. The only difference is instead of using 15-minute, 5-minute, and 1-hour POIs, I'll be using monthly, weekly, and daily POIs, and maybe getting into 1 or 2 trades a month, right? And that one trade might be -1. The next trade might be, a partial at plus 0.5, and then might run to a final completion of about plus 1.2. But overall, the RR of the month would be plus what is that? Plus 0.7. And if I'm trading $1 billion, that's 0.7 RR. What is that? So we'd be risking, let's say 1%. You'd be risking about 10 mil on each trade. We only make 0.7 RR. You'd make 7 million in a month, right? So not that bad, which is why I'm be okay with trading and not trading the lower time frames and spending so much time in front of my computer, but instead playing and doing some other shit completely, and getting involved whenever the daily accumulation happens inside of a monthly POI, which is going to take it can take months. Literally, if you just use the monthly and daily chart to trade, you'd get a setup every decade, right? But what we're not waiting that long, guys. so yeah, 1 minute is the lowest I'm going for now. Yeah, that's fine, don't worry about that. But you'll see very soon that as you start playing with the 1 minute chart, a lot of people had this happen to them too. They're like, oh no, the minutes is as far as I'll go. But then as they start doing this and they start watching the 1 minute, they're like, but I want to see the price action inside there. I'm not getting enough information. I need the 5 second. And you'll see, it'll happen to you too. It's one of the coolest things here, honestly. Okay, so here we go. We got a question. Cool. Say if EU formed a higher low and Aussie US dollar formed a lower low. Okay, so here is EU, and it made this just here, and then here's AU, and then it made a lower low, so it did this. Okay, cool. How do you know which pair is manipulating, or do you not know until the move happens? Well, at this specific point, because this is bullish, right? Because it's already bullish, this leads me to believe that they're actually accumulating on AUD/USD. So I would actually expect this to be a manipulation in the form of an accumulation, right? Because there's already an order flow basis that is preset, right? That's how you know which one's being manipulated in that case. So you could be trading AUD/USD for setups here, or you could be looking at these demand zones to get involved in this, right? That's one way, but like I don't do that. There's no need for me to do that anymore because I can see everything on the specific currency pair or market I'm looking at. Let's take a shot every time he says Wyckoff. You guys will be fucked up. Don't do that. Me too, but mainly because I don't have access to those lower time frames. Yeah, I just got charged again. It's only $600 a year, guys. I mean, it is a lot. And if you guys don't know what you're doing yet, there's no point to pay for that because you shouldn't be learning on the second time frames. You need to be learning. I mean, like, you guys see that right now. We did all this analysis right here on this Bitcoin on a 12-hour time frame, right? That means that within here, you guys don't even know how many thousands upon thousands, fucking millions. Okay, not millions maybe, but there's a shit ton of Wyckoff schematics in here on even a 15-minute. When you get to the 1 minute, it's fucking billions, right? You don't need the seconds. If you can study something like this and say, well, where are all the opportunities I could have gotten involved in during this price action, right? Because this might not look long, but I mean, how much time is this since the overall schematic formed and got tested and then began the markup, which was right here? 72 days, right? So like a quarter of a year for the schematic to form, right? In that quarter of the year, there's so many things inside here you could have been trading. When trading Bitcoin USD, how are pips calculated for risk management? You gotta just let it do it for you. Like I can't answer that because they sometimes do it in lots, sometimes they do it in contracts. It's all over the place. You just need to test it. If you want to test it, get a demo account with the broker you're using and put on 0.01 lots and calculate. Like it'll just check how much $10 of price action is, and you can do them and like work the math backwards. Yo guys, how do y'all calculate pip value of gold if you're using one lot? You can just use one of the websites. Just use a website for like pip calculations and lot calculations. When is the optimal entry point for when using Wyckoff? Do we need to wait for the SOS to form an enter from the LPS? Kind of, right? So like I said, Wyckoff occurs, but the way you enter it can be substantially different in many cases. So it's like you got to tell yourself the story. Like I said, Wyckoff himself had multiple ways to enter a schematic, right? Sometimes he would enter on the break and then the back up. Sometimes he'd enter beforehand off of a smaller time frame, off a smaller Wyckoff, something like that. Usually, like I said, entries can be based on structure or mentfx blocks, or the demand or supply zones left behind after breaks. So use those three things to find which one optimally works for you best, or what you spot best, because your eyes will work differently than mine even if we see the exact same market, and begin to use that, right? Some people here don't even trade Wyckoff. Some people literally just trade mentfx blocks and they do amazing. Some people don't even trade mentfx blocks and just use structure plus supply and demand zones and do amazing doing that too, right? So definitely watch section 3. But sometimes I'll even take a buy stop off of a Wyckoff validation that's much smaller risk, because I know that prices usually will make a bigger retracement into another demand zone or supply zone and give me even better entry. So sometimes I'll put a little bit on just in case it does run without me, right? So what I mean by that is, like in this case, if I was looking at this, was this a daily, right? Yeah, if I was looking at this daily schematic, I would literally have some kind of buy set here that's very small on the buy stop of the validation of the schematic, just like this. And again, this is like, you could consider this retail. I don't really care. But then I'd look for potentially partials here already on this overall trade. No break even. I'd still have this low in place because I know that price can easily make a low all the way back into this demand zone, right? Which is why I don't put full risk on this. There's no point. I know that there can be better entries along the way. So sometimes I'll do something like that. Other times, you can use the projection thing that I just said, project an actual range and project it forward and know exactly where to target, right? So you can just have that as a target for your overall thing. And, you can have that hit. And like, if you wanted to, that could be a partial, and then you could have it run. So this is the point of go back and watch Wyckoffs occur, or watch them occur live, or go back and find where they occurred and ask yourself, how would I have gotten in on this, right? You literally, that's one of the easiest way to backtest. You don't have to just sit there and, play bar by bar by bar by bar bar bar, trying to find, trying to go, okay, buy here. No, you can literally go and find an area where your entry criteria is met, or at least Wyckoff is met, or some kind of double mentfx block is met, and ask yourself, okay, how would I get in this? Where would I partial? Like, you have to literally pretend like as if you're trading it and ask yourself how you would go about playing that entry, right? If you can answer yourself the ways you would do that every time, right? So what I mean by that is, if you were to ask, like right here, if you were to ask me how I would play this, I'd go in and I'd say, okay, we have this Wyckoff schematic. I'd have a little buy stop here. As I have this buy stop set, I'm going to have a partial setup here. But at the same time, I'm going to be looking for re-entries at the demand zones here. Because they're deep, they might not reach this, but this mentfx block that confirmed this mentfx block, which is inside this larger mentfx block, is met with the areas in here. So I might look for a buy if price is to come into here. If it is, and a Wyckoff forms, how am I going to buy it? Well, similarly, I'm going to take one at the buy stop, the validation of the Wyckoff, which would be here. Again, you can find that Wyckoff on a lower time frame, right? SC, AR, ST, STB, maybe an SOS, spring or a test, break, validation, get in, right? Or I would also, actually, not only would I take this buy stop, but I would also not only look to partial it up here at a potential, supply zone, I would also look for re-entries at the last demand zones, and I'd look for re-entries here on a lower time frame, look for re-entries where? Here on a lower time frame, and similarly would most likely have a buy stop at the highs, partialing, having expectations that price could make a move back down into here for better entries, and that might have not happened. Partialing the original entry here, partialing this entry here, and partialing this entry right here, right? Because that would be 1-to-1 of this overall range, and then holding for higher highs. As this gets put into place, because I'm aggressive, I will literally manage to here. I'm happy with the R secured on every single one of those trades, and however, I don't even know how this moves here. Maybe it takes it out, does it? Okay, breaks higher. Okay, well, it's Bitcoin, so it just takes off, no shit. But, right, you need to be able to look at any part of a chart and understand where you would have gotten involved. Literally, like, at this point, the reason I started to create this little, where is it? Okay, let's go find it. The reason I created the Only Markups channel right here is because I need a lot of you to recognize that you can click on anything. So I'll just scroll through this and just stop whenever. So let's just go all the way here and let's go down, up, down, and we'll stop right here. And we'll click on that, right? When I open this, first of all, I can look at someone else's idea and be like, okay, it could be a good idea. But when I look at this myself, I should already know, okay, on a higher time frame, I broke structure here. Most likely there's a demand zone here that might be tested. However, we distributed here. We've been falling relatively hard. There's structure here. And if we are to make a move back up, it'll come up into these supply zones. If it's going to do that, we need to see Wyckoff. We can see Wyckoff's occurring. However, we did take out the lows here, but we did break this structure. So this is a validation of this structure here. If I see a move back into here and see Wyckoff confirmation right there, I want to take buys up into the partials above these highs or into the partials of these supply zones and into the sells up here, right? You need to be able to look at any chart, any markup from anyone and already know what your own bias would be on the overall pair, right? That's what it means to understand what your entry criteria and style of trading is. It doesn't matter what you're looking at. You should be able to look at anything and say, yeah, right there is somewhere where I would look to be involved, right? That's what you want to work towards. Yeah, hopefully that made sense. How did you know price was going to tap in deeper? Oh, on Bitcoin? Let's see. So let's go find, where were we? Where were we? What is this shit? What is this? Get rid of this. Bro. Where's price? Oh yeah, it's up here. All right, nice. So it was on the 1 hour. So the original area was like this whole thing. I think this whole mentfx block, if I'm not mistaken. I'm not 100% sure. Don't remember. Doesn't really matter. Oh no, it was like this whole thing. There was something here. I don't even know. But it tapped into it. And the reason that I said it would go deeper is because for me, Wyckoff never began to happen. And for me, if Wyckoff is to happen, then this can be a perfectly fine buying climax. So at that specific point, my expectation was that price wants to reach deeper, right? Because if it started to do this and then tapped in, now the expectation changes. But because it reached in and then moved back, I expected it to tap deeper, and lo and behold, we had a larger Wyckoff play. And as you can see, Wyckoff is setting up on all time frames. Right now on the 1 hour, a Wyckoff isn't even complete. There's a Wyckoff happening here, and if it gets below this, most likely we're going to see a move all the way back down to some areas down here, right? But at the same time, within that, you get lower and you have Wyckoffs that are happening here, which are being validated, so you can expect at least a move to, if this Wyckoff is true, into at least some areas here, which is now working a lot with the 1 hour structure, which in this case would be, breaking higher here, making its way back into the overall mentfx block. So already it's in the mentfx block, but if it is to come in and give you buys, it could be from where? Either here, which is where it's coming into right now, or because we're expecting this range to be what is actually like targeted lower. Notice where that is, somewhere inside here. So this is all still fully plausible if it was to come into here, right? So it's just kind of studying it and understanding where you are in a range, or understanding how price is approaching an area. So in this case, like if this had broken down even harder and then began to give me Wyckoff distributions, I would have taken it lower. That's fine. But in this case, I was just expecting it to come higher. That's all. Especially since if you start to refine some of the areas here. Okay, actually, I tapped this one, but if you refine it even higher to some areas in here and the imbalances here, you can see that there's still prices to be mitigated of some sort. All right, so let's keep working through some of these questions. How do you calculate position for Bitcoin? Just that stuff you just have to look up. It's all based on contracts and stuff like that. Even I get confused by it, so I always have to look it up myself. Can you explain the price movement in terms of liquidity? Yeah, price only moves from areas of liquidity to liquidity and into areas of liquidity, which are supply and demand zones, right? That's what the crux of section 1, 2, and 3 cover. So definitely check those out, man. I'm sorry, I kind of confused by it. If that kind of answered it, let me know. If it didn't, can you try to word that a little bit better for me? And then I can maybe get into that a little bit. Search for Bitcoin, yeah. Did you enter this on your funding account? The spreads are so big. No. I don't enter FTMO on this. Not at all. Fuck no. FTMO spreads are terrible for Bitcoin. This is all like solo. So none of that stuff. Never. Honestly, like I just mark up Bitcoin for myself, though. Like I said, I didn't even enter this one myself. But I was expecting it fully to occur, and you guys saw the analysis beforehand, and I'm just showing you guys how it played with the Wyckoff in that area multiple times, right? I myself didn't enter this at all, though. But like I said, if a market's moving and it's live, it's a way for me to continue forward testing something, right? And I can forward test my own strategy because I understand it can apply to anything. So That's why I was just kind of going over this guy with you guys. I only had the trades on EU last week, and you guys saw all those buys. And again, right, I was buying into a completely sold off market, but it was working every single time, with the exception of one or two. I think I lost like 2 trades, and the rest were like either BE or partial plus BE. None of them ran as much as we wanted them to run, right? Because as you guys remember, I was targeting the completely new highs, so they never ran that far, as you know. Bias from high time frame market structure, right? Higher high, higher low, buy bias, lower low, lower high, sell bias, any particular time frame. No, all time frames, always. You can operate on all of them, right? Like I said, if I was operating with a much larger account, I would just stick to higher time frames because, well, one, I'd be trading much bigger lots, so it could be really, really kind of shitty with even tiny spreads or even commission costs, right? So I'd have to stick to higher time frames, but at the same time, because you have so much money, the wins, you're happy with even a 1RR secured in a month off of $1 billion. That's just how it is. That's what we need to kind of have click in our minds. Even though it's not uncommon for a lot of you to even make like 10RR a week, but your goal shouldn't be that outrageous and outstanding. All you need is a net positive over, and your net positive is all you need, right? Your pluses have to be more than the minuses, and that's all you pretty much need. On FTMO, wow, you could have said slippery slope. Oh, you were joking? Oh, shit. Okay, my bad. What is a mentfx? Okay, you guys are fuckers. But yeah, mentfx block for new people. Because I know some people were asking about it, but like I said in previous webinars even, and even in the mentfx block thing, they are subjective from any high to a low if it's in a bullish market, right? From either this high to this low is a mentfx block. Price right now is mitigating this mentfx block. And yes, we can expect it to be bullish after its mitigation, or even 50%. Similarly, it's mitigating this mentfx block. Similarly, it's mitigating this mentfx block. Usually, based on the time frame you're on, you want to use the overall move because it's actually showing you the orders that are kind of put into the market from the beginning to the end. And if those orders are going to sustain and hold in a given direction, they will hold at these blocks, is ultimately the point of that, right? So hopefully that helps. He's joking. Yeah, I know you guys are all jokers. Is this session being recorded? Of course, always. He goes over that in section 1, and guys, he was joking. And Wyckoff's within Wyckoff's. Everywhere, man. Wyckoff is within Wyckoff everywhere. Like you guys saw, I went to a random low point of Bitcoin and dissected for you like 6 Wyckoff schematics all the way down just on a 12-hour chart, right? So if you got even deeper into that, it gets even crazier, right? Is Corey online? Yeah, Corey with the webcam. We love him. That's great. Oh, monthly and weekly POIs for the 15-minute. I use 4-hour 1-day max. Yeah, monthly and weekly could sometimes work for 15 minutes. It just depends. If you refine them even on a monthly or weekly, there could be 15-minute setups. But yeah, there's definitely a lot of 15-minute price action in a monthly, right? So I guess if you did use monthly and weeklies, 4 hours or dailies is pretty normal. How can we spot a sign of strength in phase B of an accumulation and not confuse it with a UT of a redistribution? Well, if you watch section 3, we talk about how reaccumulations and redistributions are really not important to us at all. Because for you to know whether it's an accumulation or distribution is going to come from the bias you've already preset. The Wyckoff does not determine the direction you're trading. The direction you're trading is already determined. The Wyckoff determines where you might be able to get involved. That's the only difference, okay? All right, Sebastian has the meme of the week. We always have a meme of the week. mentfx SZDZR. Let's see what this is. I swear. I think That's great. I love that. That's some good shit. Okay, but they're actually supply and demand zones, but that's good, man. Is it 600? Damn, I didn't even know. That's a lot more than I expected. Yeah, the spread on FTMO for Bitcoin is terrible. I still stand by the fact that FTMO's delivery of Bitcoin price is also terrible. It's different sometimes from the actual Bitcoin delivery prices. So, if you want to trade Bitcoin, do not do it through FTMO. Is just all I'm going to say about that. Could you look at the 4-hour EU double top and see how it liquidated highs but didn't break the past 4-hour high Does that tell us that the institutions don't want to get above that high? And also, does that tell us that the demand zones won't hold and we should look for sells? I mean, I've been looking for buys despite that, right? So remember that over the week, I've also seen the same 4-hour highs and stuff, but I've been looking for buys, right? And other people have been looking for sells, and both of us have been profitable on each end. I still, on EU overall, if we just go to the daily, just keep this somewhat simpler. If we just go to the daily, I mean, we are still coming to mitigate this large last down candle back in 2020 of November, right? From this overall accumulation, right? This accumulation happened, got validated, and now we're coming back for the test of it, pretty much, is what we're doing, right? So if we are to have a test of it, and if it's not going to not hold and go lower, then that test is going to happen from here, right? That means that we could have that deeper pull.